Hello and welcome back to episode 5 of the Winnipeg Market Watch podcast. I am one of your hosts, Keenan Brown, joined as always by the real estate investor extraordinaire, Denzel Sullivan. And this episode, we have a very special guest with us today. Paul Kuegel has been a real estate investor for over 10 years. He's done between 90 and 100 flips, but he's kind of lost track over time. He is a family man with interests including his wife and kids and spending time with them. And it sounds to me like Paul's really got his priorities straight, working on running a very sustainable and profitable business while still focusing his time on family. Paul, it's a treat to have you here. Denzel and I are looking forward very much to interviewing you and discussing the April data with you on today's show.
Thank you guys. Yeah, thank you for inviting me and I'm looking forward to it. It's an honor to be on the show as well.
We are very thankful to have you. Without further ado, then, I will get talking about some of the April data, and I'd love to hear both of your opinions on some of the changes that we've experienced in the Winnipeg market over this past month. So let's start first things first with the exciting bit, pricing. In April, the Winnipeg detached home benchmark price was at $416,200, which is up from the March level of $409,900. That brings our year-to-date gains at positive 9.53% and our month-over-month gain of positive 1.54%. So, guys, with gains like this, we're basically about 3% off from the May 2022 all-time high. As investors, how are you feeling about this? And is this what you expected last month? Is this what you expected in December before the new year? Um, how are you feeling about this? Denzel, why don't you go first?
Um, you know, every month that we've been seeing these gains, I've been increasingly more inclined to sell a good portion of my rentals. With the interest rate environment being the way that it is, having the rentals have become less and less desirable for me. I have probably about half of my portfolio that's sitting on variables, and so there's a lot of pain with that. And, you know, as much as I'd love to hold onto those properties, it doesn't really make sense at this point. And so it's great news to me to see that the market is just about there with regards to it being close to the all-time highs. And obviously with a lot of the stuff that I have coming up for the flips it's just great news all around. What about,
That's It's very
sorry.
positive. No, I was going to say that's very positive that you take that kind of perspective on it,
Yeah.
and I think it's a nice direction to take it. But yeah, Paul, we're curious to hear from you too. And by the way, we don't really know exactly what your real estate portfolio looks like. Do you hold real estate as well, or do you only trade property?
So I just focus on buy, fix, and sell. I've had duplexes and rentals over the years, but when the pandemic came, the prices were skyrocketing, so I sold those all off during that time. So it was a nice payday at that point, and a nice exit uh, point as well. So then again, so now I'm doing about 8 to 10 flips a year. I've been doing that for the last 6 years. Started off with one flip. It was a live-in flip. That one I broke even on. And then that's kind of how I did a lot of the work in that one. That's how I learned how to price things, how to talk to contractors, how to, some people I asked, well, if I come in and help you, can we get the price down a bit? So then I learned as they worked and I worked alongside them. But so back to the appreciation there on the market. Average is I think about 2 to 5%. So I'm usually not too focused on appreciation. I always assume that it's not going to appreciate when you're flipping, because
Mhm.
if you're banking on that extra nine, or say you sell it in 6 months, over the year you're guessing and hoping and praying that it appreciates 6%, and that's maybe your part of your profit. But if you do that, you're going to get in trouble. So I don't really pay too much attention to that. If you're in rentals, that would make more of, you'd probably be paying attention more to that. But yeah, because you're always looking, I'm always looking in the past, what has things sold for, so that I can see my exit point is. But then if you get that extra bump, that's a nice surprise.
Absolutely. And let me just ask you one kind of follow-up question to that. Um, how much of your historic information analysis, when you're looking at what's sold in the past, do you ever price in depreciation or the chance that the market does fall? And if so, how much room do you tend to account for?
I do. So we'll kind of get a good idea of what properties have been trading for back about 6 months, and then I kind of buffer in another 10 grand, and I try to list it 10,000 under what the true after repair value is, and then we try to get a little bit of a bidding war. Last year we did about 8 flips, and 7 out of the 8 went over asking. So it definitely works, and it's a lot less stressful if because you know I used to before you learn as you go. I used to pick the highest comp in the area and then list it for that and then pray it sells for that. But then you're dropping it $10,000-$20,000, and that's not fun.
No kidding. Any comments on any of that, Denzel?
Well, me and Paul are pretty much from the same world, and so I could definitely see where he's coming from with regards to his comments about not reaching for the stars when it comes to your underwriting for flips and things like that. If you're hoping that the appreciation is what's going to bail you out of a bad deal, you're probably not suited to stay in real estate as a flipper. Being conservative is how we are able to manage the risk and take care of other people's money. Obviously, investing is never guaranteed, and there's things in the market that we don't have control over. But, with a lot of things that Paul said there is what I would expect from someone as experienced as he is. But yeah, so well said.
Thank
Excellent
you. Thank
stuff.
you, Denzel.
Moving along here, the supply situation in the market appears to be holding steady, which is actually atypical for the season. In most years, the April supply has largely been significantly higher than the March supply, but this current case looks like it wasn't particularly different at all. And as kind of part and parcel to that, it's for the first time since June of 2022, 48% of detached homes have sold over list price rather than under list price. Now, as we've discussed on this podcast and in the articles on multiple occasions, that metric is actually just as much about pricing strategy as it is markets accelerating and moving upwards. But as investors, when you see a statistic like that, does that make you want to price more aggressively, or are you guys already thinking of transitioning to listing at what you'd really like to see and saying offers anytime at this point in the year? Either one of you can go first.
I'll let you go first, Paul. I would like to hear what you think about that because Keenan and I talk every day about pricing strategy for
Okay. Um, it might be changing because like I said last year, we priced a little bit lower and then did week or two, or just a week for showings, and then have an offer day. We are my last flip I did, it was a condo in Tuxedo, uh, right behind what's it called? Rumors Comedy Club. One of those three towers there, and we just put offers as received, and we actually got, and I put it up pretty high. Like I put up what I thought was like a high price, and then we got 5 showings lined up for the next day, and we got 2 offers within 24 hours, and it went 25,000 over asking within 24 hours.
Wow.
So it's it might not be okay just putting offers as received now.
Yeah.
Interesting stuff. Denzel, what's your perspective on all this?
Yeah, I think it really depends on the area. I'm not actually too sure, Paul, if you might know how many, because I'm aware of which flip you're referencing, but I don't know how many condos in that size class in that tower were available at the time for the price that you were asking, you know. And so sometimes it comes down to like you know, the sub-market itself, you know, an area that has 20 houses for sale and they're all sort of in the same price point. One could argue that, you know, there's a lot of options for buyers, right? So they'll basically go in and pick the best one out of the 20, right? But if you go into a neighborhood, and Keenan will jump into it later, where there isn't a whole lot for sale, well, buyers are forced to just pay whatever the seller's asking, right? Especially if they're the only one on the market. So I think, just to go a bit deeper, it really comes down to what the availability is like, because there's little markets inside the market, right? You know, I was reading the written articles, Keenan, and you mentioned 3E not really having anything for sale. And all of a
Correct.
sudden you get a couple listings that come up, and anyone who is a buyer with that criteria in their search for that area, you know, they're like, okay, let's go look at this thing. And then I can already hear the listing or the buying agent going, well, this is your only shot. So if you want to move in the next 30 days, we got to write an offer, right?
Hmm.
So offers as received versus offer date stuff, I think it really comes down to availability in these neighborhoods. If there happens to be a lot of inventory in an area, I think offers as received is appropriate, and you can just kind of ask for what you feel like it's worth. If there isn't a whole lot of property available, and maybe you're the cheapest house in the area and there's maybe 5 or 6 houses, maybe you do an offer date. Get as many buyers through the door and then see what happens when you guys go to list. So that's my take on it.
Very reasonable, and I would actually say I agree with the both of you that at some point you got to stop and consider what's the general situation, and there are times where I think either can be correct. I would say for sure this is a nice transition to the next section where we talk about the hot areas of the last month. But if I had a listing in 3C or 3E, I would definitely be putting an offer date, because both of those areas year to date, it's been the case that every single detached home on the market has sold within the month it was listed, leaving 3E at 105% absorption year to date, 3C at 100%, and a couple other interesting areas, 1D, which is South River Heights, and 1J, which is Fort Garry, at 96 and 93% respectively. Um, that is absolutely incredible that we're still at 90+% absorption in some of those areas. But I'd say the more interesting thing about this absorption report here is a lot of the neighborhoods that were very hot last year, including the northernmost chunks of North Kildonan 3G and 3F, Tyndall Park 4J and 4K, as well as some of the areas like Southdale, Windsor Park, River Park South, Woodhaven, Silver Heights, Westwood, and the like, are all actually in the 80%, 75% range. They're not absolutely maxed anymore. I've speculated that this may be because pricing has it's come to a head there, and purchasers are simply unwilling to bid the average homes in the area any higher, and therefore they're seeking other options. How do you guys feel about that? And are there any neighborhoods of interest for you and your businesses right now that you're keeping an eye on, or you're watching a little more closely than the rest of the market?
So I would say, yeah, it's interesting when you're saying how there's some areas that are getting maybe frustrated and not wanting to bid up anymore.
Mhm.
Um, I feel like maybe, you know, the top end, I want to focus, I'm trying to focus more on the top end, and then the lower range. I find the middle is it's a tough spot to be, because people are more focused on a lot of people, that's their final, they're not first time home buyers anymore, so they don't want to overpay, or they don't have to overpay, and they ask for everything that they want in that specific home. And I kind of like try to focus on the $400,000 and less price range, because it's first time home buyers, it's a bigger pool, and they don't need or ask for everything, because they know they'll eventually sell that and go into the next bracket. And then the high price range, 700 and maybe to 1.2, you can actually finally spend on nice finishes, and people have the money in that price range, they really appreciate it. So
Mhm.
yeah, I think that the 400 to 700, that's a tough range to be in. So if you're flipping, I think the low or the high is the best place to be.
To be honest, I'm going to jump in before Denzel can answer, but as a realtor, I would also say that as you get to about 700,000, that becomes very hard for us too, because the buyers are going to have very, very high expectations, and sellers in that price range too are not in a situation where buyers are writing them offers that are screaming, "Hey, take my money!" Like nobody's ever in their life said, "Like, oh, hurry, I need a $750,000 two-story urgently in this area." It's like, no, it's not how that works. You don't panic buy in that price range. You meticulously comb over the information and consider it. So interesting to hear from your perspective. It is the same because I know for us that is that's always a challenging one too. But I
Okay.
apologize for cutting you off there, Denzel. I really wanted to throw
No,
that
no,
in.
that's yeah, I could agree with Paul that, you know, anything in the first time home buyer price point is just at this point in time where the market is hot and affordability isn't exactly the greatest. It's really busy, and there's not a whole lot of options out there of nicely renovated product. A lot of it is either grandma's house or maybe it is someone who's lived there for a little while and has done some minor upgrades. But for the most part, it's tough to find a house for sure. Now, when we start considering the more luxury space, I guess one would consider that 700 plus. Yeah, it is. It's hard to please people in that price point. I have a few friends right now flipping houses 700K plus, Paul being one of them, and there's there's a lot of details that need to be looked after, and it's I would only say if you're doing this for the first time, not to start there. Start with something easy. Back in January, I did a house in St. James. It was under 200 grand. It was a really cosmetic renovation, and it sold literally in the first day of it being on the market. And so clearly the demand is there, but again, when you start to get into the higher price points, it gets increasingly more difficult to please people. And so for me, like Paul, I like to kind of stay in the first time home buyer price points, which I know you mentioned 400, Paul, but I would even take it another 50 grand up and say 450 and under is kind of where it is, especially with
Yes,
the benchmark price now
definitely
being,
pushed up. Yeah, it's definitely pushed up there over the years.
yeah, like the benchmark price, Keenan, what was it again? 415?
We're at 416, but the average sale was 435 for detached
Yeah.
homes.
So like, let's call it 1,200 square feet bungalow, 3 bed, 2 bath with a garage. Like that's 450 renovated or not, pretty much as long as it's solid anywhere in the city. That's what it's worth, right?
In most cases, yes.
Yeah.
Most
So
cases, yes.
you put quartz countertops, you put laminate countertops, or you do tile in the bath, or you don't do tile in the bath. There's a good chance that you're probably going to still fall 5 or 6% of 450, I would say, if you got a garage.
In
And I
many
think,
areas, yeah. Or go
Yeah.
and
ahead, Paul.
if you don't mind me jumping in, yeah, I agree because the prices have gone up quite a bit. So I think yeah, 450 is probably more the cutoff. Even like four could be 475. But I was also gonna say that the reason why I find it difficult in the middle between say 450 and say even let's just say 750, those people it's tight, like you don't have as much spread between your buy and your sell, but they still like to fit in all the nice finishes. But that bracket of buyer still wants the finishes of 700 to 1.2 million, so you can't fit that in that price point. So that's why it's tough because they want that high end stuff, but you don't have enough margin to fit it. So then once you're going to the high range and you can actually pay for that stuff, that's why I think the high end is good and then the low end is good.
Fair enough. I think that's a really smart way to approach business here. I'm going to take a second and ask you both. I'll start with you, Paul. I understand you have a few ongoing projects right now. What areas are you keeping an eye on in regards to the projects that you have ongoing? And are there any neighborhoods in particular that you're targeting as a possible area to try to buy in over this next 3, 4 months upcoming here?
Um, yeah, so I like anywhere where the numbers really work. I like North Kildonan, um, kind of anything surrounding just the suburbs, kind of just outside of the core. So like, yeah, North Kildonan, Transcona, Saint Vital, Wolseley, St. James, like kind of just that nice circle around the downtown. Yeah.
Okay. Excellent stuff. And Denzel, I know where you're looking already, but why don't you tell everybody about some of the neighborhoods you're keeping a close eye on regarding your business and properties that should be coming to market within the next 30 to 60 days?
Yeah, just like Paul, I'm looking in areas like Charleswood. I'm a huge fan of the West End, west of Arlington, for those of you who are from Winnipeg and listen in. Um, that's like the Daniel Mac, Sergeant Park area. Uh, I even like Sinclair Park, so as long as I believe it's west of McPhillips. Also interested in areas like that. Anywhere I have property under contract, I closely monitor what that submarket's doing, because it obviously is going to affect what I'm going to list my property for when the time's right, and when the product's ready to be listed. So I'm all over the place. I think that this year, more than anything, I have property in almost every part of the city that's coming to market, except in the more higher price points like Linden Woods or Tuxedo. But anywhere where you could buy a house for, 450 and under, I'm in those areas. So I'm in the Maples, I'm in Garden City, I'm in the West End, I'm in Deer Lodge, I'm all over the place. So there's a lot of areas that I'm looking, but one of my most favorite places to flip houses in at the moment, because of the success that I've had to this point, has got to be Saint Vital and St. James.
Fair enough. And you have had a lot of success in all of those areas for sure.
Mhm.
Um, I know because I've been involved in a lot of those transactions, and I think you're going to continue to do well there. And actually, coincidentally, all of those general like market areas at large have been performing really nicely, at least for the past, I'd say 18, maybe even 24 months, at least based on the data.
Yeah,
I'll just wrap this section about the market update up with a couple of interesting statistics. Just so everyone listening is aware, there are only 4 months in history that we've ever had a benchmark price higher than the April 2024 print here. And those months are February, March, April, and May of 2022. And there are actually a few MLS areas that are within about 1% of their like sub area all time high, and one singular neighborhood that is currently at its all time high, which is 1H. And that area includes Ridgewood West and Westdale, which is the section of Charleswood that is most adjacent to the perimeter highway. Um, for other more specific details, please read the article. There's lots more there, but I'm not going to dictate that out over voice here with Paul and Denzel on the line. So, without further ado, Denzel and I have a lot of very interesting and exciting questions here to ask Paul about his journey in real estate investing and a lot about himself. Denzel, would you like to start by asking Paul a few questions of yours? And then as you guys get talking, I'll eventually jump in and ask him some questions that might be a little bit more relevant to the business that I do as a realtor, and we'll sort of compare notes as we go.
for sure. Okay.
Awesome.
Um, Paul, why, out of all of the asset classes you could have chose to dive deep in, why real estate specifically? And if you couldn't do real estate, what would it be?
Okay. Yeah, so I actually just stumbled into real estate by accident, and that might be similar. People might have similar things happen to them. But me and my wife, we got married pretty young. We had no idea about finances, about houses, about anything really. In our mind, you just get an apartment and you don't really think about buying a house till you're much older. But we um, our one of our family members said, "Well, we have a family realtor friend that could help you find a house. You should get a house. You're wasting your money on rent." And so we thought, "Oh, I'll give it a try." It's like we said, like we have no money though for down payment, and then we ended up talking to the agent, and this was already 12 years ago, and the market was really hot at the time, but he hooked us up with lady at RBC, and then she's like, "Oh, your credit's really good. You can get a line of credit for your down payment." And we were just so pumped because we didn't think that was possible. And so we got 100% financing, so 5% down, but that was came with a line of credit. We bought a condo, and then we wanted to start a family, so we thought let's get a house. So that condo was already renovated. The realtor had found it off market. We sold it a year later. We made $30,000, and we didn't do anything, and we were just like pure luck. So that's when the light bulb went off, and I'm like, wow, you can make money at this. And so I started going to all the seminars, the reading all the books, and then, so that's kind of how it started. And then so if I couldn't do this, um, I don't know, because it just kind of happened by accident. My whole life I didn't really know what I wanted to do, and I did want to be an architect, so I knew I wanted to be in like real estate space, but I ended up just stumbling into this. So I think if I was to do anything else, I think yeah, that would be it. If I could go, I would go back to school and be an architect, I guess.
Cool.
Interesting
Okay.
stuff.
Yeah, no, totally. I mean, I feel like Paul, your story is very similar to a lot of people who end up going full time in the business. You kind of just start with one deal, are pleasantly surprised that there's a ton of money in it. I mean, if you're fortunate enough, I also know some people who flopped right on their first deal too, probably don't listen to this podcast and will never do another deal ever again. But yeah, no, that's awesome. I'm really pumped to hear, you know, that your story is very much like mine. You know, you and I obviously have had a lot of dialogue about how we started. For those of you who don't know, actually, Paul and I, before I went full time, used to work together. I used to be Paul's acquisition manager, and I think I maybe helped him find one deal.
Yeah,
Before
and
I
then
quit.
you were just growing so fast because you wanted to be do your own thing. So we did that one deal, and then you exploded on your own.
Yeah, I think that was which one was that again, Paul? Was it Kildonan?
Kildonan, yeah. No, that was a
Yeah.
great deal. Oh, you found a good one there.
Yeah, and you know what's funny? That was actually just a Kijiji deal. Um,
Yeah.
Pretty sure it was on Kijiji, and Paul was, Paul actually helped me with Paul's taught me a lot of stuff. For those of you who haven't met Paul before, he's a great guy. Took the acquisitions coaching with Bryce Kaminsky, and yeah, everything was just history from there. So yeah, man, how long ago was that now? 4 years now?
Oh
Five?
yeah, but about 4 or 5 years. Yeah.
Holy smokes.
Time goes fast.
Yeah, time just flies. Cool. Well, that's awesome. So the next question I got for you, Paul, is what was the best deal that you ever passed up? That you look back on it and you're like, oh man, I wish I closed on that thing.
Um, I'll have to think about if there's any specific ones, but it's usually if it's something that I wish I could have gotten, it's something that someone else either beat me to or outbid me on. Because I usually like if I know if it's a good deal, I'll go for it.
Mm.
But yeah, there's so many that you lose out on because there's someone that just, we're selling to, or we're buying from mostly private sellers who just want that thing sold as quick as possible. So these sellers, they'll find your number on Kijiji, they'll find your number on a website, they'll or a sign, they'll call you, they'll call 8 people, and sometimes it's just the first person that gets the appointment gets the deal. Or yeah, so it's or they'll someone will come in after you and outbid you. So yeah, it's happened a lot.
Yeah, no, and it's the worst when you lose by like a couple grand. You're like, hey, well, what was the other offer? And they're like, yeah, they were like a couple $1,000s higher than you're like, well, really? You guys could have called me
Yes,
back and we could have worked something out. But
exactly. The worst is when you think you have such a good rapport with the seller, and you think like they feel like they're your best friends, and then they turn around and do that.
yeah, or they call Keenan and say, hey, I got these flipper guys trying to buy my house. What's my house actually worth?
Yeah.
Keenan breaks the
It,
news to him. He's like, yeah, you're getting hosed.
it does sometimes happen. It does
Yeah.
sometimes happen. I try not to be a deal destroyer, but yeah, it's as an agent, like when we
Deal
gotta,
block, man. You're
yeah.
deal blocking.
Well, I guess so. We do have a fiduciary obligation to people. I'm not trying to destroy your deals, but I have
Yeah.
to tell the truth. But
Yeah.
most of the time, like the answer is pretty simple. Like I don't tell these people, oh, don't deal with these guys. They're like scamming you. It's often a matter of like, look, what's your timeline? Like, do you
Yeah,
need this thing sold tomorrow, or like the city's taking it or something? Then, like,
exactly.
I can't help you. like, like, I guess you have no choice. But if this is like a very comfortable situation and you're considering selling your $250,000 house for 40 grand, like I have to say something. You know what I mean?
Yeah, no, you're right. And like we're not in the business to steal houses from people for sure, right? Like it's more so we're running a business where we need to earn a profit for the risks that we take with buying these houses, most oftentimes unconditional, right?
Hmm.
And if the situation is suited for our service, which is a fast close and, you know, easy possession, then they can do business with us. Otherwise, I actually find myself telling people off market, hey, like I'm probably not your buyer, but if you want to open up the gates to as many people as possible, then you certainly should list this thing on the market and see what it's worth. And I usually tell them that I'll probably write on the offer date when you talk to your agent, and it'll be the same price. And then we can talk about it then after paying commission. But yeah.
A strong argument.
Yeah. Okay, Paul. Sorry, I went off on a little bit of a tangent there. But all right, so how is it investing? So I got to ask you a little bit about some close calls that you may have had through your 10-year bit investing in real estate. How was it investing when you were on the brink, and how did you manage to pull back up and get out of that situation?
Um, well, I don't share this story with too many people, but I think it's been long enough that I'm willing to share it. It was my worst deal I've ever done. It was actually my second deal. This was right after the condo. So
Oh, yeah.
I, you're researching all these seminars, reading books, listening to podcasts. I think I know everything. I didn't even have to put any work into this condo deal. Anything I touch is going to turn to gold. That's what I'm thinking. So there was this guy in the city, who he was a mortgage broker, realtor, finance guy. He had a renovation company. I'm not going to say his name, but he had the seminar. I went to the seminar. Basically, you work with all his people, his team, and then you are supposed to make the flip this house, and you don't have to do anything. Sounds great. So obviously, I pulled all this money off my credit cards, took the money from the condo flip, worked with this guy, found a deal, financed it through his company, hired his renovation company, and then everything seems to be going well. But then all of a sudden, the renovation project comes to a screeching halt. And then I'm like bugging him for months, like 3 months, what's going on? And he just makes excuse after excuse. And then he finally gives me a bill for the whole renovation is supposed to be $40,000. And then I get a bill for $100,000.
Ooh.
Yeah. And so I'm like, what is this? Like, this can't be possible. It's not even, it just finished being demoed. And then he's like, no, it's an hourly contract. We spent that many hours in there. You didn't sign a, because I didn't know anything at the time. So he's like, you didn't sign a price contract, you signed an hourly contract. So no way to prove that he didn't do that work or that they weren't spent that much time in there. So anyways, then at that point, I'm running out of money to pay for the mortgage, which is his mortgage company. And then so I had no choice. I talked to a lawyer, and they advised me just to see if you can sign over the house to him, and then forego any debts. But obviously, I've lost my $40,000 down payment, or yeah, I put in 20 for down payment, 20 for into the renovation so far. So he basically, I signed it over to him. Thankfully, he said yes. He took the house, took my 40 grand, and then he finished flipping it himself and made some money. Anyway, but the best part is years late. Well, okay, so not the we'll get to the best part, but
Yeah.
he did this. I found out he was on the news, and he did this to, like, I don't know, countless people in Winnipeg.
Oh my
And
God.
then he ended up going. I think he went and the best part is he ended up going to court, losing all his licenses. And I don't know if he ended up going to jail, but I know that was on the table last time I checked.
Holy smokes.
Yeah,
I'll be doing some research on the Manitoba Securities Commission website
Um,
later
Yeah,
today
I'm
for sure.
definitely
yeah,
gonna ask
yeah.
more about that off the record
A lot
because
of people will know who he is.
I'm sure it's reasonably easy to find if it
Yeah,
was that large of a
yeah,
heist.
yeah, exactly.
yeah,
But so then yeah, so actually that, like, a lot of, so then, so your second question, Denzel, that helped me realize I can dig deep and think to myself, okay, I can either give up or I can push myself and pull myself out of this credit card debt and just reach for the stars. So I had two choices. So I just dug deep. We bought our next live-in flip, or our first live-in flip where I actually had to do work. I got in there, we financed it ourselves. We had no money for the renovation, so I was there 12 hours a day just renovating it, doing all that. And then we dug ourselves out that way, but it helped, but it really pushed me to dig deep and to realize what I can do. And then yeah, so that's how I got out of that and paid that debt off and then kept moving forward.
Holy
wow.
smokes, what a story,
Yeah,
actually.
that's all. That's a great story. I'm sure the listeners will be excited to hear about that, or really excited to. They're going like nodding their head like, oh yeah. Especially the seasoned investors, like, yeah, I got a story like that too, man.
Yeah,
Because
yeah,
that's what I was doing the whole time.
yeah.
I think what you might hear in a lot of the other real estate podcasts and entrepreneur podcasts, business is a lot of mindset. It's um it tells you a lot about yourself when you get into those tight spots and facing adversity on whether or not you are built for this line of work. We take on massive risks, um, just trying to make a living with no hourly pay, right? And so I'm glad to see that you're still standing and that you were able to make it through that, because I probably know a handful of people right now who are having some challenges in the business, and there's an opportunity to get out of any situation, especially if it's a money problem situation. It's more so like a time factor, right? It's like, when are you going to come out of this? And it just comes down to how long you're willing to fight for, because depending on what the debt looks like or that deficit of which you lost money in, might take a couple of years of just stacking the wins and stacking the days of consistency.
Yeah.
Right. And I'm sure you probably got a lot of lessons out of that flip and have carried those forward into your career. And, you can always go back to that time too and be like, okay, especially when you're on the ropes, okay, if I got through that, then I should be able to get through this, because that's how I feel a lot of the
Yeah.
time is when I'm going through something in my business, or I always just think about, if I made it through before, what's the difference today? Like, sure, maybe the dollars are a little bit bigger because it's all relative, right? The feeling that you get of that anxiety, it's relative. A guy who makes, you know, 15 bucks an hour and that's his living, like that's his salary for the year, he might be worried about like 250, $500 speeding tickets. Whereas me and you, Paul, we might be worried about, tens of thousands of dollars in renovations mistakes. So it's all
Yeah.
relative. Like that feeling doesn't exactly go away. Even
No.
the even a guy on the street who's doing some panhandling, you think about that guy, he's looking for 10 bucks and he's still stressed out at the end of the day, right?
Yeah.
Whereas we got, $10 is it's 10 bucks, you know.
Yeah.
So it's all relative and really awesome story. I don't know, Keenan, if you have any comments on that.
All I have to say is just be careful out there, guys. Like it, yeah, just be really careful, especially when, money is involved and especially when it's debt. Like if it's not yours, then be even more careful than you would be if it were yours. And
Exactly.
actually, that brings me to a couple of questions for you here, Paul, about the capital raising side of the business that you're in. Do you mind telling Denzel and I a little bit about who your early investors were? Like I know you mentioned you financed a lot of the stuff yourself, but um, who were the people or the person that kind of invested in you first? How did you go about raising that money, and how did you structure that deal?
Okay. Yeah. So at the very beginning, I was using my own money and own my own credit. Um, I didn't realize that you could raise money. A lot of the gurus and all that, they do all the no money down, but they're showing you how to do it with credit cards, lines of credit. So once I um, finally dug myself, I'm glad I did it. I'm glad I did. I started off doing it that way because um, you're kind of testing your abilities and you're testing yourself. And I'd rather test it with my own money than with somebody else's. So then once I kind of got out of that debt and I had and we sold our live in flip, the one where I was saying I was renovating myself. My wife was actually helping me renovate it as well. Um, we made then I knew I had the confidence that I could actually make money at it, and then I could go out and raise money for the next deal. And so what I did is I started going to all the different networking groups in the city. Um, there's always three, four different ones that people are putting on. Investors are people that are looking for deals, looking for money or have money. They're at these events. And so I just would network like crazy. Like I'd come home with like 30 different business cards, and then every event, and then I would follow up with everybody and I'd ask if they wanted to invest with me, and I had my own pitch or whatever. Um, so then finally I found one guy who was willing to work with me. And when you start off, you have to offer like quite a bit. So I was doing 50-50 splits on the profit, plus since they were borrowing money off their lines of credit, I was also paying their interest on that. So at the end of the day, maybe I would have made like 40% of the profit, maybe 30. But just to get that first couple deals done to prove that I could do it, it's all about attraction, because then you want to attract other investors. But the only way to do that is to do a deal. So no, it didn't really matter so much what I made on the first deal with an investor. It was more so showing other people that I could do it, post it all over social media, showing what I'm doing, then you can slowly um, borrow cheaper and cheaper money. So now I'm at the point where I can. So I found other investors along the way that now I can borrow at maybe 10 to 12% interest. And then let's say the profit is 40 grand, instead of splitting it 50-50, 20 each, now I can maybe pay say 10 grand in interest and I get the other 30. So that's just an example how that as you go, you can get cheaper and cheaper money.
So I'm just curious, are the people that you originally were working with from a borrowing standpoint still with you, or did you get different people to give you better terms when that money became available over time?
Yeah, so I did eventually get other people to replace the other more expensive investors, and um, so then when I did, I've been working with this same investor for the last probably 8 years now. So the first 2 years I was having to give up a lot of it, um, which is fine. And but the other guys weren't in the position to um, offer the rate that I got with the new investor, and so yeah, so then I've been working with this other guy for a long time now.
Interesting stuff. Denzel, I feel like this is maybe a similar pattern to what you experienced too. Would you say that this is typical for aspiring real estate investors in your eyes? And how do you feel about everything that Paul had to say there?
Yeah, absolutely. I think that the hardest part about being in real estate and starting to use other people's money to fund deals is, you need a bit of a track record to help get people on board with the concept, right? Because people throw around the idea of flipping houses even more, especially with social media now being a pretty huge thing in this space. A lot of people make it look super easy, right? And so, sure, okay, we're gonna go and buy this house for X, renovate it for Y, and then sell it for Z. But if you don't exactly know some of the questions an investor might ask, maybe there are some legal questions, there could be some accounting questions that typically come up, and you aren't able to answer those fairly quick with confidence, it's going to be hard to raise capital, right? Um, and so Paul's sort of, I guess, the steps you went through, Paul, where you're using your own money, then you were able to get a guy on board, and then that kind of spiraled into more investors and more capital. Very similar to myself, my first ever deal, I financed it with my own money. My girlfriend and I got the financing together. We bought our first place, renovated ourselves, and then by the end of that deal, I was like, well, yeah, there's money in this thing. And then one thing led to the next. I'm in front of some family talking about how all of this works. And before you know it, I got my first ever set of investors for over six figures, right? And that was huge for me when I first started. And that feeling is incredible when you first land investors with that kind of money. So, yeah, I think for anyone who's looking to start in real estate, if one of the obstacles that you feel are challenging to get over, which is money, I would highly suggest to do a lot of studying in the world of real estate financing. Try to cover your bases in terms of understanding the legalities of borrowing money from somebody else. And then in addition to that, just make sure you understand value in the marketplace, like what houses could really be worth when you're finished renovating them. Because the construction piece, as much as that could be also a daunting thing too, it all doesn't work if you don't have the money, right?
Totally. And I'd just like to jump in and say that that little bit of advice that you gave there to real estate investors, I would say should also apply to realtors as well. If you are going to be representing people that are going to be trading in the market, especially with the expectation of making a profit, the best advice I can give you is you better know how the financing works. You better know what houses are going to sell for fixed up and the kind of margins that people are seeking if you have any hope of being competitive in the field. And you need to understand this not to educate the investor that you're working with necessarily, but to be able to speak with them on a level playing field. And because they know, right? Like you guys, if you're dealing with a realtor who randomly is offering up a deal, I'm sure you can tell within minutes if they know what they're talking about, right?
Oh, instantly. Right away,
Yeah.
you'll see how experienced the guy is the minute that they open their mouth and they start talking about the house and the market. Either
Right.
it's this guy's green and he's never done a deal yet, or you're like, okay, yeah, this person's been around for 10 years plus.
So think about that for a second and imagine, like, if you come across as the green guy and you've got investors like Denzel, Paul, or really anybody else, like you're already in a position where your seller is not being adequately represented if you're on that side. And if you're on the buy side too, then like your client can sure carry you through the transaction, but they don't necessarily have to unless you control the deal. So I would agree with Denzel that that bit of advice is very critical for those who want to become licensed realtors as well and be effective, especially when dealing with investors at large.
100%. Yeah.
Mhm.
Um, Paul, I wanted to ask you a question about agents in general, like kind of further to that little topic that I just went on a tangent about. But
Okay.
in your eyes, what do you think makes a good realtor? And I'd like to know your answer from both the perspective of what makes a good agent when you're trying to buy a property to use as a project, a burr, a flip, whatever, and what makes a good realtor when it comes to listing the product that you are putting out to the marketplace.
Um, so over the years, I've probably used about five or so agents like that I've hired specifically, and then there's been other ones that have brought me uh off market deals. I think it's the ones that just don't, to find these deals, you have to grind it out, and you have to be willing to go walk through houses that are falling apart, hoarder houses, water leaking in the ceiling, you know, the so some people just don't want to deal with that kind of house or that kind of buyer. So it's just I think some agents, it's just personal preference from their perspective. Um, but yeah, so as long as they're willing to put in the effort and put in the time, because that's another thing. It takes a lot of time to weed through all the listings that are out there. Keeping an eye on houses that, maybe door knocking on a house that is falling apart. Like a lot of agents wouldn't want to do that. So it's and even calling other agents and saying and asking if they have a house that comes up, call them first, and then they can bring it to me. So yeah, it's net willing to network, willing to put in the effort. I think it's a lot of effort actually. So that's the thing.
Fair enough. And let me ask you this. If an agent that you are working with brings you a deal and represents you on the buy side, do you generally list the property with that same realtor? And if not, like, would there ever be a case where you do a buy deal with a realtor that brings you an off-market property and you don't really have a high level of confidence in him or her? Would you then take that product and list it with somebody that you trust?
Um, I've always relisted it with the agent that brought it to me. I think if they have enough um confident or enough like drive to find that deal, they deserve to relist it. But you can always, if you're worried about their ARV, you can always check with another agent. Um, so then you're not relying on just their ARV. So you can definitely double check what sale price is to make sure it's accurate, but they definitely deserve to get that listing at the end, because you want to treat the people well that are bringing you the deals. So if you don't give them that listing, they're not going to bring you another deal. Someone else would easily relist it with them if they brought that deal to them.
Fair enough. And actually, on that note about ARVs, um, I know that I am asked for ARVs by Denzel usually once or twice a day during the week, and I'm more than happy to provide them, of course. And for those of you listening, if you ever need my opinion to double check on something, I'm more than happy to help you too. But when an agent does give you an ARV, and they send you data to kind of support their justification or their numbers in general, how much weight do you put on the agent's opinion of the ARV versus your own understanding of the market and your own review of the data? And maybe let me ask you this. Um, do you think that your own gut instinct trumps what a realtor is going to tell you about the value of a property in general?
Well, at the beginning when I first started, I had to just blindly trust the agent. Um, so you are at the mercy of what they say the ARV is. Um, but as you get experience and you realize, you know, maybe maybe you bought a flip on a corner lot, and it's comparable to one mid block in, like, if you don't consider the corner. But then once you sell it, then you realize, oh, it sold for a lot less than that mid block one did. Then you kind of put that in the back of your mind, and you're like, okay, well, you know, corner lots sell for a little bit less. You kind of gain experience, and you put all these things in your back pocket, that when agents bring you things, you kind of can help make your own conclusion, where you couldn't before without experience. So you kind of build that up over time. I think even like the age makes a difference. Some people like to compare a 70s build with 30s build, but
Oh,
so it's
yeah,
like, and try to some agents have brought me stuff just to try to get a one-off sale, and they don't care about the outcome of it. They just want to get that thing sold. So you have to be very careful too.
naturally, yeah. That is, of course, a risk that you've got to take. Um, or that you've got to understand you may be forced to take. So the better you understand the industry, the less likely it is you're going to get hurt in those situations. But I'm just curious, Denzel, if you're still listening here. I see you're on mute. Maybe that's just because of background noise, though. What do you think about that now that you are as experienced as you are? Do you take agent ARVs more seriously than your own gut opinion now that you have several years of trading the market and watching the data yourself?
Yes. You know, being as active as I am in the market, and I guess, as experience with the experience I have now, thinking about what an agent will give me as an ARV, or what I get as an ARV from an agent, will tell me a lot in terms of what they're trying to do. It's unbelievable with some of the ARVs that I get from agents, because one thing that one of my mentors mentioned to me at the early parts of my career was, never forget that the realtors are salespeople. And when it comes to making sure that you're protected, it doesn't hurt to get another opinion if you feel like that agent's ARV is a little high. And even it could be low, right? There's a lot of agents that I have around me that when I ask for an ARV, if it comes back lower than expected, I get another opinion to see what that other realtor might say. I've had instances where very reputable realtors have given me, two different ARVs about 30 to 40 grand apart. And so then that's when I might have to crack open the data and have a closer look and see what these houses look like on the inside, and not just take a number off the top of my head, or at what's being sent to me, at least. Um, Now, when it comes to just my overall gut, I feel like if I don't feel good about something, I can normally identify right away when I'm starting to talk myself into doing a deal because we'll talk ourselves into doing anything. And I'm sure you probably know that, Paul,
Yeah.
where you might be in an area that's super desirable and you're looking at it and you're like, oh man, how could the ARV be this low? Like there's nothing for sale in this neighborhood. And while that can be true, you can never beat what's already been traded, right? You can't go around the data. The data is the data, the comps are the comps. And if you don't feel comfortable, paying a certain price for a property, then there's no reason for you to go ahead and speculate and think that it's going to sell for X, right? So, um, whenever I'm stumped and I feel, the ARVs are a little too high or a little too low, I'll look at the data a little closer, Keenan. And oftentimes, especially today in my career, I'll just pass on it just because I already know that there's probably going to be another deal sent to me, or one of my flyers are going to call me, or maybe a seller that I door knock might be interested in selling. And all of a sudden the deal that I didn't do was my best one. Right. So, I learned a lot of lessons kind of trying to speculate because of the hot market that we just got out of. I mean, it's pretty hot right now, but COVID was a whole other beast. And so, yeah, I think that my gut at the end of the day is probably what I'll always go with, despite what an agent sends me.
Fair enough. I can completely understand that, and that is a nice position to be in because, as Paul said, when you're just starting out, you don't necessarily have the basis of understanding of pricing to be able to do that. So it adds to your strength, and it goes to show why Paul was able to sustain this business for 10 years, and why you, Denzel, have been. I know it's not 10 years yet, but you're at year 4 or 5. I think I forget, but still a lot longer than a lot of people tend to last in this market. As I'm sure many of you listening know, there are home flippers and real estate investors that go bust every single year, whether the market's hot or not.
Yep.
And well done to both of you to be able to sustain this at least for the years that you've both been involved here. Um, I had a couple other questions for Paul here, but I've been kind of hogging the time. Denzel, did you have anything that you urgently wanted to ask Paul before I sort of transition the conversation a little bit?
Um, Paul, I gotta ask between managing your own jobs, because we all know the business model is to hire a general contractor, you manage the general contractor, and he does the whole job, and it's really easy. What do you prefer in your business?
Mhm.
Do you prefer hiring a general contractor or do you like to sub everything out yourself? Or do you do like a hybrid of both?
Um, I've gotten to the point where I've done so many deals that the best ones are always where I've split it up into individual trades. What I find is that the general contractor is well, at the very beginning I had a general contractor again because like the real like how I said I didn't know with ARVs how to figure out ARVs. I didn't know necessarily how to do everything, so I had to hire a GC at the very beginning. But I always made sure I asked questions, even if I thought maybe they thought it would be a stupid question, or if I thought it was a stupid question, I didn't care. I would ask, you know, just anything that I didn't know, I asked, and so you learn a lot, and then that's a big reason to hire general contractors at the beginning, even if you make a little bit less profit. If you can find someone that's trustworthy and can get the job done, um, uh, but even if you make a little less profit, you're learning. They're showing you how to do it properly. I learned so much just watching, being on site, working, even putting in the labor side by side, um, with different trades, just to know, because then once I started hiring everybody out separately, I can go in and they're quoting me a certain amount, and I can say, no, I've done that. I know how long it takes to to hang 30 sheets of drywall, or I know how long it takes to paint a whole house. So I can negotiate and they'll respect my negotiation a little better because I've done it. And sometimes I can say to them, you know what, I'll just do it myself because that's a crazy price. And then they'll come back and say, oh, you know what, actually we could do it for that price. So so now I'm hiring everything out individually. I have um set people, people still come and go as they price, some people grow in their business and they're not a one-man show anymore and they'll need to charge more, which is fine and that's good for them. They're growing, but maybe they've outgrown my business. So then you have to find new people.
Yeah.
So it's the ever-flowing ecosystem of people coming and going. But I like there's more control with hiring them individually, and you can if you find the right people, yeah, more control, more profit, which means more profit in the end for you.
Yeah, I agree. I think that it really comes down to what your manpower looks like, because some of my mistakes I felt like I made in the past, because I'm more of a volume sort of guy with the amount of opportunities that I come across and the capital available. When you get into multiple projects at once, like right now, I probably have, well, three of them have been complete and seven are open. So that's a total of seven projects right now that I have active. And I find it really challenging if I'm managing all the jobs myself to stay on top of the accounting and, some of the mistakes that a contractor might have while on the job. So in my case, hiring a general probably makes a lot more sense, just because I don't have the time to necessarily be on site each and every day to babysit.
Mhm.
But I feel if you're hiring every guy out, you're definitely going to be able to get that construction costs way lower. And the name of the game is cost control, right? It's really easy for you to go out and spend $10,000 more than what you expected at the beginning of that project, right?
Yeah.
So nowadays, I pay the premium for hiring one guy to use his guys to get a job done on time, because, like I said earlier, like there's so much opportunity out there that if I spend 10 hours trying to save 10 grand on one deal, I'm missing out on another 20, 30,000 in the next. So I rather just be in and out of a house, deal with one guy, and I'm done with it. And maybe instead of making 25 on that, I'll make 15, but at least I'm done and over, and we've got the money back in the accounts.
Mhm.
Because time kills everything in this business, right? Uh,
True.
if you're in a deal for too long, the market might be different when you're done. The holding costs just bury you, and it could get ugly quick. So now I'm really focused on contractors that just get it done and done fast and done right. But Paul, you've done a really good job of managing the circus, I'd say, with the amount of people that you deal with. And I mean, how many deals do you actually have on the go right now?
So right now I just have two on the go, or
Yeah.
actually three, but they're all in different phases. One had just sold, one is kind of like quarter of the way through, and then the other one I'm just about to take possession of.
Yeah.
Yeah, I've done the way that you're mentioning, and I guess when I hit that, like I did 12 flips in 1 year, and then I found that I made then the next year I did six, but it's the 12, the one that I did 12, I hired out a GC for all of them. And then I did six the next year and I split it all up and I made more profit when I did the six, splitting everything up, doing some of the work myself too, than I did with the 12. If
Yeah.
if you can find someone, the problem is I've never been able to run into somebody or a contractor that's been able to do what I've expected of them. I think maybe I'm like a perfectionist to maybe a fault that I can't find someone that can hit that level unless I'm there all the time.
Yeah.
But yeah, so that's what I found. I found once I got past a certain amount of deals, I started to lose control of it.
Yeah.
But maybe that guy's still out there for me that I'm that I need.
I've actually been exploring the idea, I'm not in Canada right now. I'm away and I'm supposed to be on vacation, but I'm talking to you guys because we all love real estate, right? I've been exploring the idea of if one were able to actually create a partnership with a competent general contractor where they're able to structure their work in a way of, you know, cost, like basically charging you cost and giving them equity in the deal. Maybe it's 25 or 30%. And I wonder if that would be a way of incentivizing somebody to get it done cheap and fast and with good quality if they're involved in that. Obviously, there need to be a lot of trust there, but I think that it could be a strategy that might work if the contractor was the right guy for that job. Because imagine a world where your contractor is actually your business partner and he's on the tools and he's out at liquidation world picking out a cheap vanity that still fits the item list and the look of the house, and he's negotiating hard and trying to find the best price for your electrical and yada yada yada, right? So I,
Mhm.
I find that it is hard to find someone who is willing to do something like that because people are greedy. They sometimes don't understand the amount of risks that we take on with buying these houses, and all they see is the finished product at the end and how much money we possibly could make. But if you could create a relationship, I would be definitely game for that, I feel. Because at this point, especially with volume, I don't mind sharing as long as the work is done and done well,
Yeah, that makes
right?
sense.
Mhm.
Something I've been thinking
I'm
about
not,
it.
yeah, for sure. I'm not sure if I answered the question because I skipped back to your other question. What was the one you originally asked me before I went back?
Um, I'm not even keen. Was that you who asked him?
No, you
Oh,
asked it, and it was kind of the same. Like that was actually a very interesting tangent to hear you guys both kind of elaborate on a little bit. But
Yeah.
um,
oh, okay.
I think the essence of the question was regarding how do you structure your general contractor versus individual trade
Okay,
hiring and
that's
why.
right.
Oh,
And,
yes.
and that seemed to, I felt satisfied with the answer. Hopefully the listeners also do. But
Yeah.
Yeah.
that is definitely not my area of expertise. In fact, I've always left it to Denzel and whoever the operator happens to be to sort
Yeah.
out their own contractor stuff. And I'm there, mostly at the very beginning of the deal and the very end of the deal, and sometimes in a very I don't know what the right term is quite, but a very sort of tertiary way in the middle of the deal. I guess I'm
Yeah.
involved in walkthroughs, market updates, checking on things, making sure that no really poor decisions are made with the renovation and the like.
Yeah.
But I,
Well,
I
I
see
guess,
merit to both sides, like
yeah.
from my point of view. You know what I
Yeah. I
mean?
guess I'll just add that I think it comes down to personality and personal preference too. Because like I I don't I don't necessarily enjoy having high volume. Just simply I like it more simple and I like to have more control over it. And I actually like going to the job site and I like talking to the guys and I
Yep.
like I like that kind of stuff. For some reason I don't like deal hunting. I just, you get, and Denzel probably can attest to the kind of calls you get where people are calling you and screaming at you for putting a letter in their mailbox or
Music
so
to my ears.
what's that?
It's music to my ears. I love getting reamed up.
Yeah, so I think it comes down to personality type. It's just um so people have to assess what they enjoy doing more. I think as long as you have enough deal flow through maybe other sources, you don't have to um expand to doing like maybe signs or letters or stuff like that.
Yeah. Yeah.
I gotcha. That was a pretty interesting diversion there. I didn't actually expect the conversation to take that turn, but it's fun to hear you two sort of discuss that into the business, just mostly because it's not one that I'm frequently super hands-on in. But I wanted to leave with a final question here for Paul, which is something that we've asked every guest that we've had so far on this podcast. And Paul, that question is, what are your ambitions for the future of your business? And specifically in the next 5 years, what direction would you like to see things take for you and your real estate career?
Okay, yeah, it's a good question. I'm actually currently evolving into apartment development. So I have land under contract in Westport that's just beside the Assiniboine Downs. And so I'm working on raising money for a 238 unit apartment development.
Wow.
And yeah, so that's I've been learning behind the scenes and trying to get networking with people, and it's taken me about 3, 4 years just to get to the point where I got something under contract, and then I got the architect drawings done, the site plan done, and now I'm just yeah, I'm just in the process of raising the money for that deal, but um, we're about halfway there. Um, so I'm pretty confident. I have a bunch of meetings this week as well with some high net worth individuals, and they've tentatively said yes. So I think we're gonna get there. So over the next 5 years, I want to keep the ball rolling with on the development side and slowly shut down the flipping side of the business and then just focus on development.
That's
Wow.
that is a pretty big and pretty ambitious project for those of you listening who don't quite understand the scope of that. A 238 unit apartment building in West Winnipeg. I'm not even going to begin to point to what kind of money that could be, but I'll leave you with this: that many one bedroom suites of older buildings sell between 110 and 125,000 a door. So you folks can do the math at the kind of project that we are talking about here as complete. So
And then this one will be we'll buy it, we'll build it and then hold it long term. And
okay,
there's other, so it's kind of like a development like Bridgewater or Sage Creek that's going up out there. So there are other apartments that have already been built by other developers. So I have one of the maybe 5 lots under contract. The other ones are already built on. So it's nice going in as a newbie, knowing that there's demand there and that there's already other developers, betting on the area. And I've also hired Progressive Real Estate to do the construction. So they're and also consulting. So they've built about, I think, almost 500 units in Winnipeg. So he's the owner of that, his name's Jeff Milnes. So he's mentoring me through the whole process. He's going to be building it, leasing it up. So I've got a good team behind me here.
yeah, that is really quite excellent stuff. I guess I know I said last question, but now actually last question. Um, you mentioned earlier in the episode that you didn't actually go out of your way to hold real estate rentals much, but obviously this apartment play, as you just told me, is intended to be a buy and hold. And I was curious, where have you been keeping your money as a store of value that your flips produce, first of all? And then, second of all, regarding this apartment project, what has made this an attractive deal as a long term hold? I'm assuming this is a very significant investment for you to remain a part of after the project is complete. Just curious what the logic is and what the bigger plan is, if you're willing to share.
Yeah, no, that sounds good. So with the smaller rentals, the single family or duplex, I just like I was self-managing them, and I just found that there's not much margin in them to hire out like a property manager. And so when I'm dealing with all these like tenant, they talk about people always talk about tenant headaches. Like I was dealing with those, people calling me with just all sorts of crazy scenarios. Like
Hmm.
yeah, sure, the listeners probably have similar scenarios. But I didn't want to deal with that anymore. And then also the thing that I liked about development is well, so this will be split up into two buildings, but you have one roof, you have one front door, you have like maybe it's all like, let's say you had 238 homes. All of a sudden that's more work than having two buildings. You can now you can have economies of scale where you can have on-site property manager dealing with all those headaches. You can have a leasing company. You can have and now all of a sudden it's a real business, and people 8 year we'll probably hold it for 8 years, and then big pension funds, they're the ones you're going to be selling it to. So there's like big real money in this game, the
Hmm.
development game. I think it's the top of the food chain.
I actually completely understand, and I would agree that when your buyer is another like mom and pop real estate investor or like medium time sort of guy, that's one thing. But when you're talking about REITs, pension funds, and like global money, yeah, the exit eventually sure does look quite lucrative, and obviously very special product that you're going to be having your hands on here soon, should everything go well. But
Yeah, thank you.
yeah, that's everything that I had for notes here. Denzel, did you have any final thoughts or anything you'd like to leave us with?
No, yeah, nothing at all. That was a good
Okay.
that was a good episode. I was really looking forward to have you on the show, Paul, because for what it's worth, for those listening, Paul is probably one of the most successful flippers that I know in Winnipeg. So, I mean, if uh Paul, how could people reach you if they wanted to ask you some questions and things like that? Instagram, Twitter.
Yeah, thank you, Denzel, for those compliments there. Yeah, so Instagram would probably be the best. Just my name followed by my last name, Paul Kuegel, or my Instagram business page, Kuegel Development Corp. So I'll post all our projects on there, upcoming ones I've done and in the pipeline. Yeah, so either one of those would be perfect. Just send me a DM.
Awesome. But yeah,
I
that's it for me.
I just followed Paul on Instagram now, and folks, if you have any follow up questions, you can leave them in the comments section below as well. We will make sure that Paul, Denzel, and myself all see them, depending on who they're obviously addressed to. We are going to be more than willing to help assist you. Paul, thanks again for joining us. It's been great, and we would love to have you back sometime.
Thank you. And thank you for inviting me on the podcast, guys. It was really fun, and yeah, it's an honor.
Excellent.
Awesome.
Folks listening, have a good one. We will see you next month.